Good morning, everybody. Hope you had a wonderful evening last night. Pretty damn cold here. Went out walking last night, and it was 52 degrees, steady state winds of 33, gusts to 46. So the wind was moving everything sideways. We had dust being blown in from western Kansas, so we really do need moisture. And there is some rain in the forecast. And I bring this up because some of you might be interested in trading wheat. The wheat prices are going up because of drought conditions in the Texas Panhandle, really through western Nebraska, southeastern Colorado, which is where a lot of the hard red winter wheat is produced. And hard red winter wheat is people food. Not so much in the United States, but around the globe, but it adds to the food inflation that we're experiencing in the meats, in fruits and vegetables, and a lot of it, well, in fact, the inflation in meats and fruits and vegetables is entirely engineered by government policy. The ethanol program makes the price of corn higher for feeding livestock and poultry. And water restrictions in California are going to drive up the price of vegetables and fruits. So when central planners and government agencies get involved in something because of the way decisions are made, because of how those decisions are influenced, you usually get the worst of all worlds. There is a unique solution for every problem, and that does not come from a committee most of the time, especially a committee that's never held accountable for their actions. So, good thing the Fed says there is no inflation out there. Just ignore your food and energy bills. Okay, today is Tuesday, 2014. Tuesday has been the day that the stock markets have rallied. The strength overnight in our E-mini is attributed to the Japanese euro, the yen carry business. The Japanese markets are down, the yen is down, the euro is up. Buy stocks. The sanctions, the market started rallying late yesterday and has continued overnight. The feeling is that the sanctions are not going to impact what goes on in Europe. They're minuscule. Problems will be worked out. Europe's economic machine is not going to be shut down by curtailment of Russian gas. So politicians can make speeches and strong-sounding rhetoric, but it's business as usual. So we do have a very strong tendency in 2014 for the stock markets to rally in the United States, and we'll see if that takes place today. It looks like it will. I think overall the stock markets are in a trading range. We did not make it down to our 1838 to 42 area. We stopped at 44, and the market has snapped back pretty quickly, and that strength in the stock market is impacting the financials. The second tendency or seasonals that we're playing right now, it is a post-auction week. That usually means prices in the financials go down as the primary dealers sell futures, setting up the next auction. We also have the FOMC announcement tomorrow where no change in current policy is expected. Interest rates will stay the same. Another $10 billion will be cut from the Fed's open, overt support of the markets. The ADP number and Friday's non-farm payroll numbers are suggesting at least current economic growth will remain intact. So a lot of stuff is kicking in today, but the news, potential news tomorrow and Friday will keep the large institutions sidelined. This should yield a trading range. So we have really, really good support in the 16 area, this 15.5, 16. Then we have the high volume number down at 13. So this would be our next little 12, 13 would be the next little band of support. If you wanted to place a resting limit buy order out there, you'd have a resting limit buy at 13. Just off the structure. I know there's really good support at 12 to 16. I'm really torn this morning whether we're going to have a 13 to 17 buy or a 17 to 21. So we'll make buy 1, 17 to 21. I'd like to get it done at the lower end, and buy 2, 9 to 13. Like the buy 2 level very much. Okay, the sell's pretty damn aggressive. It's 24 to 28. And then 31 to 03. And today's news, we have Case-Shiller looking 13% year on year, up 0.7% on the 20 city. Should not impact, but as bad as the housing news has been of late, it might have a little more impact than normal. And we have consumer confidence, and I've seen anywhere from 82.6 to 83.6. So Econoday is coming in at 83. That number would be supportive for consumer spending, economic growth, at least where it is right now. So that's what we have for the note. Looking for a trading range with a lower bias this morning. And not afraid to buy into weakness, especially against 12. When the market is in a trading range, your large institutions are really happy to work value. They know where it is. They can go in and they can buy and sell against that particular number and work the market all around it and make a little money on their normal transactions. So I think that's the situation we're in right now until we get through Friday's news. And we will have an end of the month day tomorrow where the stock market has recaptured its gains for April. And that'll tend to sideline the large institutions too. They don't have a lot of incentive to sell. Okay, the knob spread has come in overnight. There's a little extra weakness in the bond. If that continues, the short will be in the bond, not in the 10-year. We are at 31. The last rotate stopped at 04, so sell one's aggressive as hell. We're there. And then 7 to 11. On the buy side, we've got volume down here at 17. We got a little volume node at 23. I'm going to open this up. We're going to make 17 to 21 the buy. We may have to raise it to 21, 25. We'll just have to see. And then we'll make it 9 to 13 for buy number 2. Okay, gold overnight is reflecting peace in the Ukraine and Russia. It came off. We had our second buy zone yesterday. It was 85 to 87. It made it to that in the overnight session. It's bounced back. We're currently trading at 91. For those of you that are looking to put money into the account as you learn how to trade, you really ought to go over and visit Eric's Gold Room. I mean, it really is extremely well suited for a beginning trader. You can be wrong a couple of times and still make a pretty handsome business plan. You can't say that in other markets like you can in crude and gold. And Eric had a big day yesterday. Live trades, I think they were up a 13 or 1400 bucks on in the room. So it was a good day of trading. So don't forget it. Okay, we got support 85, 87. That's buy 1. Buy 2 is 80 to 82. On the sell side, we've got resistance at 95, 97. Last rotate up in London stopped at 94, so we'll make 94, 96, sell 1. And in the last rotate yesterday in C period stopped at 1300, so we'll make 99, 1301, sell 2. Now, one of the things that's different about gold is because it is so volatile and it does shift gears quite quickly, that could be disconcerting to a beginning trader. But it is uniquely suited for the retail account because the really large players can't get in and do anything quickly. So it gives you a little bit more staying power and it does offer just unusually rich profit trading potential. Okay, looking at the euro, the yen's off overnight. The euro started up high, found its peak in London, as you'd expect. London is the dog for the currency market. The rest of the world is the tail. So when we left the euro yesterday, we were selling 65s to 75s. The high looks it's just above 75. We have spilled right now. Our buys yesterday were 25 to 35. We're just getting down there right now, so we'll make 25 to 35 our first buy on the idea that the bottom won't fall out of the market today because of FOMC tomorrow. And then we'll make 38 plus or minus by 2. Okay, the sell is going to be pretty aggressive. It's going to be, we're at 32 right now. It's going to be 45 to 55. And then 65 to 75 where it was last night. So big night overnight for the euro. And we caught it right last night. But this these 50-point rallies or more that we sell in the overnight session really are good trades. Can make you a lot of money if you can trade London time, and that's the difficulty. I always kid Fitz about almost enough to make you want to move to London. Not quite, but almost enough. Crude oil dances to its own drummer. It's hard to say what drives it. You got, depending on the news day and the piece of news that comes out, you can make some story for economic growth. The thing that really drives and moves this market quickly is war, rumors of war. So we were hoping to buy yesterday the 25 to 50 area and did not get close to it. We were hoping that they would come down and put us into this area. It just basically yesterday's close held. So here we are. So we'll make 101 50 to 75, sell 1. Very aggressive, and then 2, 2 1/4, sell 2. On the buy side, we'll make 50 to 75, buy 1. And buy 2, we'll make a 100, 125. But it's real easy to lose touch of the fundamentals in gold once you get past war headlines. Right now, economic around the world, you can still make a case for slow growth. And that should keep demand where it is for crude. And on to the E-mini. Today is Tuesday. I put up several times last week, and we'll continue to do it. The tendency on Tuesdays is for the market to trade higher. The statistical tendency on every other day of the week is for the E-mini to trade lower. Now, that doesn't mean it trades lower. on other days of the week. It just means that's a statistical tendency. So today, if you walked in and bought the opening of the day session on Tuesdays in the E-mini, every Tuesday of this year, you'd be money ahead. And zero hedge articles today. Why is the market up? Their lead off was, it's Tuesday. Then it was the Japanese carry. Interesting when you look at the earnings that came out. Spanish unemployment higher than forecast. Italian retail sales lower than forecast. Great Britain's GDP up 0.8. They were looking for it up 0.9. But the previous report was up 0.7, so it was better than the previous report, but less than forecast. Deutsche Bank's profits fell less than they were forecast to fall by the Deutsche Bank. Nokia is up because they're restructuring, going to do a stock buyback and debt reduction with all the cash that they have. So, in reporting S&P 500 companies so far, 74% have beaten their earnings per share forecasts, but only 53% have beaten their projected revenues for the first quarter. So the economic news is generally supportive for a sideways economy right now. We do have FOMC tomorrow. That will keep the large institutions sidelined, and we have non-farm payroll on Friday, which also tends to keep large institutions sidelined. And then tomorrow is end of the month, which will tend to keep the sellers at home. So I think we're still dealing with a trading range. Today we're going to have a little upward bias. We do have resistance at 75, so sell 1 is going to be 75 plus or minus, then 79 to 81 for sell 2. And on the buy side, we've got this high volume number down at 65. We're at 71, so 65, 67 will be buy 1. We may have to raise that. Last rotate down stopped at 68 right here. Thought we're going to try to buy on the cheap starting out and see if we can take out the 75 to 80 area. If we can't take out 75 to 80, no matter what the Tuesday tendency is and the rest of it, we're going to get short. Consumer confidence is the big number at 83. That is supportive for a higher stock market, for consumer spending at the retail sales level, and for buying stocks. So that's what I have for right now. Let me kill the recording.